I think we can go to the business now. Cole Stangler, are you there? I think we can now go to the business. My apologies. Let's find out how the markets are reacting to the uncertainty in the United States. Cole.
That's right, Laura. So we did see some solid gains yesterday, Thursday. Investors trying to make sense of what appears to be the most likely outcome at this stage. I should really put the emphasis there on what appears to be, which is a Joe Biden presidency, potentially, but a Republican-controlled Senate. Things a little bit more subdued today on the markets after that really positive day yesterday. So today, the major European indexes in negative territory here as we close out the week. The FTSE just below the flat line, the CAC 40 here in Paris down around 0.9%. The DAX over in Frankfurt also down around 0.9%. Still, though, it's been a pretty positive week overall. And the thinking among investors is that there may be some political gridlock in Washington to come if you have a Biden presidency but a Republican Senate. But that's not necessarily bad news for the markets. It means that maybe stimulus, the economic stimulus, might be a little bit less big, a little bit smaller than anticipated. But if you have a Republican Senate, it means that maybe there's less likelihood that some of Biden's more progressive economic policies are going to get through Congress. So less likely you'll see a hike in the corporate tax rate, for instance, from 21 to 28%. Less likely, for instance, that you'll see tighter regulations on big tech. And clearly, investors see that as fairly good news.
And Cole, let's leave the US aside for just a second, because in emerging markets, stocks and currencies are on pace for their biggest weekly gains in 5 months. What is driving that?
So it's also tied to the U.S. election. Currencies like the Mexican peso and the Chinese yuan, both up this week. These are currencies and markets that have been hit by tensions with the U.S. in recent years, especially China with that trade war we've seen with the U.S. So there's some expectation that there could be less of those tensions if you have a Joe Biden presidency as opposed to a Trump presidency. So that's affecting the currencies. And then at the same time, a closely followed index for emerging markets up some 6% this week. Now, in large part, that's due to a sense that the U.S. Central Bank, the Federal Reserve, is going to have to do a lot of the heavy lifting on stimulus if you don't have a big fiscal stimulus coming from Congress, which would appear to be the case if you have a Republican-controlled Senate. That means the Federal Reserve is going to be sort of supplanting or playing a larger role, I should say, continuing to pump money into the financial system. So at some point, if the Federal Reserve is going to continue buying bonds, buying stocks, that's going to trickle into emerging markets, countries like Mexico, Brazil, Indonesia, South Africa, would then see gains. So that's one of just the many consequences we're seeing of the U.S. election, clearly affecting the world as a whole.
Cole, thank you very much indeed. Cole Stangler there with the business. Now we are going to take a short break here on France 24. Don't go away. Much more still to come.